If you think you need to be picking individual stocks or timing the market to get rich from investing, I'm about to completely flip that idea on its head. Because the truth is, you only need 4 index funds to build serious wealth over time. 4. That's it. I'm Philip, and I'm not going to sit here and tell you I waited until I had thousands of dollars before I started investing. I didn't. I started small, developed the habit, and I've been consistent. And that consistency is what's going to make you rich, not trying to find the next Tesla or the next Apple. Now, before we dive in, quick disclaimer. I'm not a financial advisor. This is not financial advice. I'm just sharing what I've learned and what's worked for me. Do your own research, understand the risks, and only invest money you can afford to lose. All right, let's get into it. Fund 1, Vanguard S&P 500 ETF. The first fund you need is the Vanguard S&P 500 ETF. This is the foundation. This is your bread and butter. The S&P 500 tracks the 500 largest companies in America. We're talking Apple, Microsoft, Amazon, Google, Tesla, the big boys, the companies that run the world. And here's the beautiful thing. You don't have to pick which one is going to win. You own a piece of all of them. Now, some people will say, Philip, the S&P 500 is boring. And you know what? They're right. It is boring. But boring makes you rich. Over the last 30 years, the S&P 500 has averaged about 10% returns annually. Let me put that in perspective. If you invested just $200 a month for 30 years at 10% returns, you'd have over $450,000. Invest $500 a month and you're looking at over $1.1 million. That's the power of boring, consistent investing. And I'm not waiting until I have $1,000 or $5,000 to start. I started with whatever I could afford, $50, $100, whatever. Because it's not about the amount, it's about the habit. It's about showing up every single month and investing, no matter what the market is doing. Fund 2, Invesco QQ ETF. The second fund you need is the Invesco QQQ ETF. Now, if the S&P 500 is your foundation, the QQ is your growth engine. This fund tracks the NASDAQ 100, which is basically the 100 largest non-financial companies on the NASDAQ stock exchange. This is where you get your tech-heavy hitters. We're talking about companies leading in artificial intelligence, cloud computing, electric vehicles, and all the innovation that's shaping our future. The QQ is more volatile than the S&P 500. It can swing harder both ways, but over time, it's delivered incredible returns. We're talking companies like Nvidia, which has been crushing it with AI chips. Meta, Microsoft, Amazon. These are the companies investing billions into the technologies that are going to dominate the next 20 to 30 years. Now, you don't want to go all in on QQ because it's riskier, but having 20 to 30% of your portfolio here gives you that exposure to growth and innovation without putting all your eggs in one basket. Fund 3, Vanguard Real Estate ETF. The third fund you need is the Vanguard Real Estate ETF. This one is all about real estate investment trusts, or REITs. Now, most of us can't afford to go out and buy rental properties, shopping malls, or office buildings. But with this fund, you're basically investing in a basket of companies that own and manage real estate. And here's the kicker. REITs are required by law to pay out at least 90% of their income as dividends to shareholders. That means this fund is going to give you passive income, regular cash payments just for holding it. And we all love passive income, right? Whether it's from apartment buildings, shopping centers, data centers, or storage facilities, you're getting a piece of all of it. This is how you diversify beyond just stocks. You're adding real assets to your portfolio, and you're getting paid while you hold them. Real estate has always been one of the most reliable ways to build wealth. And now you can get exposure to it without needing hundreds of thousands of dollars to buy property. Fund 4, SPDR S&P Dividend ETF. The fourth and final fund you need is the SPDR S&P Dividend ETF. This is your Dividend Aristocrat Fund. These are companies that have not only paid dividends, but have increased their dividends for 25 years or more. We're talking about companies with staying power. Companies that have survived recessions, market crashes, and still kept paying their shareholders. This fund gives you exposure to stable, profitable companies that generate consistent cash flow. Companies in sectors like utilities, consumer goods, and healthcare. The boring stuff that people need, regardless of what's happening in the economy. People still need to buy toothpaste, pay their electricity bills, and get their prescriptions filled. And just like the real estate ETF, this fund pays you dividends. So you're not just hoping the price goes up, you're getting paid to hold it. That's passive income stacking on top of passive income. Now here's the strategy, and it's so simple, it's almost stupid. You buy these 4 funds and you hold them forever. You don't try to time the market. You don't panic sell when things go down. You don't get greedy and sell when things go up. You buy and you hold. Market crashes, you keep buying. Market booms, you keep buying. You set up automatic investments so you don't even have to think about it. Because the biggest enemy to building wealth isn't the market, it's you. It's your emotions. It's panic selling at the bottom and buying at the top. I've developed this habit of consistent investing, and it's changed everything. Some months I invest more, some months I invest less. But I show up every single month. And over time, that consistency compounds into serious wealth. Now, if you're watching from Nigeria like me, I know what you're thinking. Philippe, how do I even buy these funds? And that's where the Bamboo app comes in. I've got the link in the description below. Bamboo makes it super easy for us to invest in US stocks and ETFs right from Nigeria. You can start with as little as $10, no excuses. You don't need to wait until you have thousands. You don't need to wait until everything is perfect. You start now, you start small, and you stay consistent. That's how you win. So there you have it, 4 index funds. Vanguard S&P 500 ETF for your foundation. Invesco QQQ ETF for growth. Vanguard Real Estate ETF for passive income and diversification. And the SPDR S&P Dividend ETF for stable dividend income. Buy them, hold them forever, and watch your wealth compound over time. Remember, getting rich from investing isn't complicated. It's simple. But simple doesn't mean easy. It takes discipline, it takes consistency, and it takes patience to let time and compound interest do their thing. If you found this valuable, smash that like button. Drop a comment letting me know which fund you are most excited about, and subscribe if you haven't already, because we're just getting started. Check out the Bamboo app link in the description, and let's build wealth together. Remember, I'm not a financial advisor. This is not financial advice. I'm just sharing what I've learned and what's worked for me. I'm Philip, and I'll catch you in the next one.